When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. Nice enough to come on and talk about what's happening in the marketplace. So Shawn, how you doing today?
I'm doing good, Casey. Doing real good.
We got the post WASDE report rundown here with Shawn, and I guess Shawn, fireworks a little bit, not as much. There was some expectations, but not quite what they meant. But it's not like a blow the doors off.
Well, as we said on your show prior, the volatility in yields is so wide. We didn't think that they would make too much of a change one way or the other, and they really didn't. They moved yields down in corn a little bit. They moved soybean yields down just a little bit, but the market expectations were that they were going to raise yields. Everyone thought that the numbers were coming in better. We didn't see that, but it was just a consensus that the markets were terrible. They were telling you something, and when it came in down and the ending stocks were on the lighter side, it just caused short covering. You know, I mean, we were just so bared up going into this report that the surprise or the moving of yields downward, which almost everyone thought would be upwards, that's how you get your short covering rally, and that's what we have today. So, that probably means the harvest lows are now starting to look more likely here, Casey.
Okay.
The one thing that's continues to be a negative is we had a very, at least the market did not like the inflation number, the CPI number that came out this morning. It came in stronger than the expectations. The interest rates, the yields on the treasuries have really spiked today. The dollar has really spiked today. You know, we were getting some reversals of those patterns. And so the macro is very bearish today. Crude oil was up $1.50. Now it's down $1. So the macro is still very challenging, Casey. So while today was a good day for grains, so long as the macro picture is going to throw headwinds like it did today, I think it's going to be 2 steps forward, 1 step back. I think we got to be just understanding that we're just not in an ideal environment for a runaway advance. And plus, at the same time, to really get the grain markets really going, you need South American and specifically Brazilian weather, and we're not going to really enter that potential till December. So,
right. All right. So, as you look out for the rest of the month, here we are coming up on first new quarter, right? So we got what we see happening here. Then you see some of this weather stuff that's coming through now. This week, especially out where I'm at, we're going to have some cold weather, possible some snow, some freezing temperatures that are going to zap the corn that's out there now and finish off what's there anyway. So dry stuff down. I guess as you're looking at the situation that we're headed to now, Shawn, with this report and some of these weather events coming, do you expect to see any big movement in the overall harvest bushels per acre when we start looking at the national average?
Well, I mean, the harvest is going to slow down here. I mean, we're getting. It looks like some rains are going to come in for at least a week or two. So whatever hasn't been harvested yet, it's going to be a slow moving train for a while here. But once again, I think that the variability in the yields is not going to go away, and I just think that we're not going to really get an answer on the crops. it could take until sometimes it takes until the June quarterly grain stocks report before the USDA actually comes clean and tells you what really happened. But
Yeah.
I kind of feel we no longer are going to start. The crop is done. Whatever it is, it is. The market's traded what it wants to trade. Today was the last report that I think that the market would be interested in what the USDA has to say. From here on out, I really think it's just about, you know, focusing on the fact that we had a third year in a row of subpar yields. We don't have what I'd call excessive inventories of corn and soybeans. We have ample corn. We have very tight soybeans. But in terms of, we're not sitting with a sea of anything. And we're going into the South American season thus far with some pretty dry conditions in many, many areas. And which means some of those acres are going to get off to a poor start. And we really need Brazil to deliver another big crop. Given that the U.S. can't seem to ever get a. I'm trying to remember the last time we had a trend line yield crop, Casey, but it's been quite a while. So I think that what that means that once the farmers are done selling off the combines, it's lock it up for next year, and in any kind of worry over Brazil, which we think is likely, given El Nino, Mordecai, and the rest, would suggest that the upside weather premium that would need to be put back on to corn, soybeans, and wheat, but based upon that, could be considerable. In the meantime, it looks to us like the harvest low season or the harvest pressure season is behind us now.
Okay. As you take a look at some of these pressures that we're seeing in the cattle market, and are you anticipating this as a correction, and we're kind of doing something where we're hitting that low now, and we're going to start moving things forward, or what's your thoughts there as we take a look at this long-term pattern right now in cattle?
So long as we don't have a financial crisis, okay, or some tremendous economic debacle, I view this as more of a correction of a quarter or maybe 2 quarters. Then will be led to a renewed move, probably retesting the highs, maybe making some new highs. But I kind of view it as a temporary pause. We still have to rebuild the herd. We still have to. We're still going to have very tight, constrained supplies. Yes, demand's weakening. Yes, cash beef prices are backing off. But if they come down enough, as long as, like I said, as long as the U.S. economy is not crashing, renewed buying will come back, and people will start viewing some of these lower prices as an opportunity to increase their demand. So I don't think this is the end all be all, but at the same time, I still think it's a correction that has further to go and could carry over into the first part of next year before we trade the second round of tightness. The one thing that I would be worried about if Brazil gets into trouble with weather, especially second crop corn, and we get a big surge in corn prices, that typically is not very constructive for the feeder cattle market, right? So another reason for the market to correct beyond weakening demand would be that we get a big surge in corn feed prices that sets the feeder cattle market down sometime in the first half. So I would definitely be watching, the weather for Brazil for that reason. And if La Nina comes back with a vengeance, as we think it's going to, and we have some sort of a partial La Nina growing season next year at least, it's drought's back again, Casey. The hot, dry weather's back. We're not going to get rid of it. This year, we actually had a cooler weather until the very end, but that doesn't hot, dry, drought, western drought. That's not going to help rebuild that herd. In fact, you could get more liquidation again. Yeah. So I just think you have to be very mindful that the cattle market's got a lot of moving pieces, a lot of back and forth pieces that depending on how they play out. But I think that it's never easy money, but I think that the runaway move to the upside, day in and day out, week in and week out, month in and month out, I think we're done with that. And in order for us to get something, more than a back and forth action, which is what we think is going to happen, you would really need to, get the economy rocking and rolling again, I think. And, I'm not saying that can't happen, but it just doesn't look like that's in the cards, at least through the first half of next year. It just seems like there's too many headwinds in front of us with interest rates, with strong dollar, with the disposable income of credit cards exceeding $1 trillion for the first time in history. People just seem to be just spending. They've run out of money. And typically that means that the consumer economy, which is 70% of the U.S. economy, is going to struggle here for a little while. So that's kind of what keeps us up at night on the cattle market, and why we want to continue to protect these prices at these higher levels, because stranger things have happened. And should a rogue wave come along that no one can predict, but we've seen many rogue waves since
Sure.
since 1997.
Yeah.
We had the financial, we had the Asian currency crisis, we had September 11 attacks, we had the 08 financial crisis, we had the European banking crisis in 14, and then of course we had the COVID crisis. I mean, I've just named 5 or 6 crises that all made risk asset markets kind of collapse for a little while before money printing came back and everything else. And I'm not predicting that's going to happen again, but it could.
Right.
And when you have a price that works, that's profitable, that's being offered to you, and you're in the business of obviously bringing more money home on the farm, given all those potential risks, like I said, I just would continue to want to make sure that I watched the money home on the farm. The upside, you're always gonna on this. You're always, as a cattle producer, you always need to sell. And so if the price goes back up later in the year in 24, you're gonna have more cattle to sell to high levels, and you're gonna be fine. But if you have a schism and something goes wrong, and we have something really bad happens, and we get just the Dow drops, stocks fall 30, 40, or 50% from the highs, cattle's probably not going to be in the 180s. Probably not.
Mm-hmm.
Probably not. I'm not, we don't know where it would be, but that kind of a scenario would probably cause the speculators to fully liquidate the cattle market. And you just don't want to be forced to having to sell at a loss when you've been given the opportunity to sell, cash sell your cattle at profits for an extended period of time. I know we've talked about this over and over again, and I don't want to, beat a dead horse to death, of course, but sometimes it's worth repeating to get the point across.
Yep.
So,
yeah, a lot of stuff going on right now, and it seems like there's been black swans throughout history. Obviously, it popped up, but it seems like the frequency and the magnitude of the black swans that we've seen since 2019 have been really big. So, I think
and let's just say tomorrow we'll wake up and somebody bombed the hell out of the refineries of Saudi Arabia. Let's just say that happened, and oil prices go up 50% from here. They go back to $1.30 where they were before. That's probably not going to be good for disposable income.
No.
Globally and in the United States to afford beef on the table when you're already are borrowing money because you don't have enough.
Right.
So that's just one example of something that's certainly possible that could easily just totally be a vacuum for disposable income for people to say, you know what, I love beef, but we're just not going. We're pulling back on that for now, and we're going for rice, bread, and some oatmeal. So
Yep, for sure. So, Shawn, you got a big announcement, man. You're on the RFD TV now on the regular.
I've been very fortunate to be given opportunities to be on that show every Wednesday afternoon now, 1:45, and be with them. He's someone that I've followed for a long time, and obviously a unique interviewer, and somebody that is widely followed. So I'm very fortunate that someone who subscribes to our reports found it in their heart to spread the good word about what we're doing. So yeah, that's
awesome,
a pretty
man.
cool thing. Yeah,
That's awesome. I'm excited for you, dude. I'm gonna have a reason to watch now. So that's good times.
Yeah.
Awesome, buddy. Well, congratulations on that, man. Thanks for being on the podcast. Folks want to reach out to you, get more information about what you're doing. What's the best way to do that?
Our Twitter page is at Faradex11. Our website is Hackett, Hackett advisors.com. We put out from time to time some interviews and some tidbits about our cycles, our statistics, our correlations, and how we make our weather forecasts and some of our capital flow work, so that people can kind of see if the way we look at the world of agriculture in terms of price forecasting might be of value to those watching your show.
Awesome, man. Well, Shawn, appreciate all that you do, man. I appreciate you coming on here kind of last minute here with after the market. So I appreciate you being on the podcast, man, and we'll catch you next week.
Sounds good, Casey. Talk to you soon.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast and check out the YouTube channel over there at the Moving Iron Podcast YouTube channel. I know, shocking how clever that is. So check that out. Go over there. Go to Moving Iron LLC for everything Moving Iron related. Got some big announcements coming up here over the next couple of months, and we got a new website coming out as well. Hopefully that'll be up here sooner than later. So with that, I am Casey Seymour. We're Shawn Hackett. Let's move some iron, folks. Out. There we go.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.